Welcome back. Glad to have you. You're watching Newsnight. The Federal Capital Territory, Abuja, is now ranked as the top destination for foreign inflows into Nigeria as capital importation rose to $5.64 billion in the first quarter of the year. This is contained in the latest report by the National Bureau of Statistics. It indicates that out of the 5 states that recorded capital importation during the quarter, Abuja pulled $3.05 billion, accounting for 54.11% of the total capital importation. This would be the first time that Lagos is overtaken as the top destination for foreign investment in the country. Lagos attracted $2.56 billion to become the second top destination through which capital importation came into the country in the review period. For more on this development, Nigeria's capital importation development, Bosin Omafaye, anchor Arise Exchange, joins me now from Lagos. Bosin, great to see you. I mean, Abuja, the seat of government.
Thank you. Good evening.
Thank you. Abuja, the seat of government, is now the top destination for foreign capital investment. Is this a bleep? What changed?
I guess what the statistics office did was to, based on what sources have said, was to report the level of investment in government bonds, which of course, is the purview of the central bank, treasury bills, savings bonds, the regular auction by the DMO and the central bank, the treasury bonds and all of that, to report all of that, those investments coming from outside the country into those government bonds in Abuja, which of course is is where the central bank sits for the Nigerian government. So that will account for that particular a chunk of the investment flow that was reported. Of course, that came basically through portfolio investment, in which the level of yield that the central bank puts on the table right now is quite attractive for foreign investors. So to that extent, we've seen very massive inflows from outside into government bonds, government treasury bills, and other dated instruments on the securities side for the government.
Okay, Bosin, break it down for us. I mean, the elephant in the room, looking at the total figure, if Nigeria attracted $5.6 billion in capital, but less than $200 million was FDI, that's quite a drop in the bucket, or drop in the ocean, perhaps. It's embarrassing considering the FDI drive we've had from the government, isn't it?
Yes, and I think, like you said, is if you call it the elephant in the room or describe it, I think is much bigger than the elephant in the room. If you look at where we are right now, and that's where the main concern of everyone should be. In 2023, first quarter, if you look at the numbers, Nigeria had, which was before the 2023 general elections, we had foreign direct investment of about 47 million US dollars. And by the first quarter of 2024, which was after the elections, after the removal of fuel subsidy, we had a new administration came in at the end of May 2023, and then you've got the realignment of foreign exchange market by the government as well. All of that took place within the second, third, and the fourth quarter of 2023. The level of foreign direct investment into Nigeria moved significantly from that $47.6 million in 2023 first quarter to about 118 million US dollars. That was a massive jump. So the government had a lot of political capital. The whole world took those big pillars, reforms very seriously. They believed the government was on right track. Everyone bought into it, despite the pains at the local end of the candle. So that was what moved foreign investors to come in massively in the first quarter of 2024. Now, if you look at the first quarter of 2024, which was January to March of 2024 and January to March 2025, and that's where the real concern is right now. There was just about 5 or 6% growth between 2024 first quarter and this year. So we're talking about $118 million January to March last year to just about $126 million in the first quarter of this year, which shows less than 6% or thereabout growth. Now, that should be a concern to everyone. What happens is are these reforms losing steam? Is the government losing steam as far as those reforms are concerned, or what you call the reinforcing reforms that should happen over the past 1 year as well? So if the goodwill and the whole enthusiasm around the removal of fuel subsidy and exchange rate alignment could move foreign direct investment from less than $50 million to $118 million in 2023-2024, but the growth between 2024 and 2025 became so small, like about 5% or so. That means it's a whole lot that we are looking at right now. It means that those enthusiasm on the foreign direct investor side is not looking as good as they were in the first year of the reforms that the administration had done. So that's on the fiscal side, and that's what we need to look at. Because if you flip that and you look at foreign portfolio investment, that continues to be very, very good. That was on an upward trajectory, whether it went into equities markets, where you have it in Lagos, or it went into the banking sector, where you had a chunk of the numbers for the first quarter this year because of recapitalization going on in the banking sector, which will end by end of March next year. Or you're looking at the bond market, which goes into the central bank as far as government security is concerned, because the yield on this asset are very good for international investors. So we need to, how do we move from this huge inflow of what you can call quote and unquote hot money in portfolio investment to foreign direct investment is the elephant in the room. $5 billion to $126 billion is a very, very big gap, Adishwa.
Indeed. But when you look at that, the other statistics that shows that only 5 out of 36 states attracted any capital at all, that's even worrisome, Bosun. What do you say to that?
Well, when you look at these 5 states, if you take Abuja and the FCT, technically speaking, Lagos, Ogun, Oyo State and Kaduna State, which got a few other investment out of 36 states of the Federation, and it tells you how much the authorities or the governments in these states are trying to move the needle. For example, Ogun State is sitting next door to Lagos. I'm sure the about $7.95 million investment that went into Ogun State didn't go into portfolio investment. They went into industrial manufacturing. Most likely that is the same for Oyo State and Kaduna State, for example. It has to go to ease of doing business in those states, and why investors are going into industrial manufacturing and other forms of business activities in those state governments. The rest were just sitting idle, as it were. So there's a whole lot that need to happen around the state governments, around subnationals, and until we see that rev up very strongly and quickly, we might just still be scratching the needle. So some analysts are saying we need about 50. Some economists say we need about $50 billion every year to lower inflation to about 3% and ramp up on our growth very strongly from where we are around 3.5%, 3.6%. How do we get $50 billion in foreign direct investment into the country? That's where the heavy lifting really is. President Bola Tinubu has gone from India to so many other countries within 2 years. He's been on a road show, as it were, trying to win international investors. But this money haven't come in. So we've seen promises upon promises. We have hundreds of billions of dollars in promises that are yet to really materialize with the dollar on the table in Nigeria. And that means that something has to happen at the subnational level, the state government. So for me as a journalist, if you're invested in Nigeria, you've got to invest in one of the 36 states plus the FCT in Nigeria. And if that is not happening, if we are not seeing foreign investment go strongly into state governments in Nigeria, then we have a big problem on our hands. Look at Oyo State, for example. The EFDB, the African Development Bank Group, a few days ago, over the weekend, formally opened the special agro-processing zone in Oyo State. That, of course, will catalyze investment into agro-allied activity in Oyo State. I was in Kaduna for the opening of the one in Kaduna State a few months ago, this year as well, just about 3-4 months ago. There are a few more that will be opened up across Nigeria. So if you're asking me why Oyo State and Kaduna State are getting direct investments in few millions of dollars, $4 million or thereabout, that's one of the reasons, by the way. How do we get to catalyze further agro-allied industrial manufacturing activities across the other 32 states of the Federation? That has to happen very quickly. We have to look at the type of things that Lagos State is doing as far as the food fund is concerned, half of 500 billion naira on the table to support at least 4 or 5 states, and everyone can pitch into that and take that to perhaps $1 trillion naira to support agro production and reduce food inflation in urban parts of Nigeria. The FCT can do the same. The FCT is sitting on hundreds of billions of naira. The FAC latest report showed that we shared roughly 3 trillion naira last month or so as FAC allocations. That's a whole lot of money. By whatever exchange rate you use, that is a pile of cash on the table sitting largely in the pockets of state governors. So something has to happen at the state level to ensure that there is foreign direct investment. This is where you have the mineral resources. This state was where you have the agro product. This is where you have all the resources, the raw materials that can catalyze small and medium enterprises, industrial manufacturing, and what have you.
Okay. Boss Omafaye, you did justice to this report. Thank you so much. Arise Exchange anchor there for you, Boss Omafaye.